And thanks for staying with us, everyone. First up, following the exemption of treasury bills from the domestic debt exchange program, investor interest in the short-term securities continues to rise sharply. This is coming after government recorded about 73% oversubscription of T-bills. Charles Nixon has more.
The government obtained a total of 3.15 billion cedis from the treasury bills auction that took place on Friday, December 9th. Though a chunk of the transaction came from the 91-day T-bill, the 182-day bill also recorded some significant sale. This clearly shows that investor interest in the short-term securities is growing, but at the expense of government bonds, which has been affected by the domestic debt restructuring. Liquidity in that regard has witnessed immense improvement for the third week running. The bids tendered for the 91-day T-bills were estimated at 2.19 billion cedis. Meanwhile, interest rate fell for the first time since January this year, whilst the 91-day T-bill yield dropped by 0.54% to 35.58%. That of the 182-day bill also fell to 36.5% from 37.2% recorded a week ago.
Well, head of trading at Republic Securities, Patrick Edem Agama, joins us now with more on this. A really impressive Friday it was for T-bills auction. 73% oversubscription of T-bills. Give us a rundown, Patrick.
Yes, Daryl, good afternoon. What we are saying is that the T-bill has become a safe haven for most investors in the market because of the debt exchange program. We can see very low interest in bonds and notes now because of this program. So this gives the government a great opportunity to be able to drive interest rate down. But I'll be quick to say this is a very slim window that's open for interest rate to drive down because of other factors that could push these rates up again.
Yeah, and all of this you're saying is because of the announcement of the debt exchange program?
Yes. Basically, the debt exchange program made it clear that it will not be, the T-bills will not be affected. So investors have seen this as a safe haven, pushing money into T-bills instead of other instruments on the market. And this program is going to end on the 19th. The window for people to tender in their bonds will end on the 19th. So we expect the market to, the secondary market to recover and start trading other bonds, depending on how favorable or unfavorable the exchange program goes. So this is a very short time for the T-bill to actually get this traction we are seeing now.
Yeah, because my next question was going to be for how long this would be sustained, but you say this is just for a short time?
Yes. We can see now that the interest is mounting. We saw about 752 million being rejected, and then people buying the treasury bill now. After the debt exchange program is closed, we are going to see whether the other bonds in the secondary market will start trading normally, or there'll be other things that will come up. When that comes up and the clarity is given, then we will see other interest in other securities other than the treasury bill. And also, there are two factors. We have the inflation and the exchange rates pressure. If inflation doesn't follow the same trend as the exchange rate is giving us, we will see that investors will be placing competitive bids instead of going non-competitive, and that can still drive the T-bill rates up. So it's a very slim window, and I think government should take advantage of this.
Yeah, and I wanted to point out, because it's remarkable, that interest rates also fell for the first time since January.
Yes, and it's as you can see, the desire and most of the time interest rate is pegged to the risk-free rate, which is supposed to be the treasury bill. So if you see the risk-free rate dropping, then we should be able to see interest rate trend downwards as well. And this is going to happen so far as we have that uncertainty with regards to the bonds on the market.
What advice do you have for people who have monies and looking to invest in T-bills?
Oh, for now, government stated clearly that T-bills are exempted from this exchange program. So people can cautiously go towards the T-bills since those are exempted for individuals and even corporate bodies. But these are all dependent on how successful the debt exchange program is, because anything can come up in the future depending on how successful the debt exchange program is.
Let's do a quick update on the stock market, because MTN and New Gold are expected to drive market activities this week. How is trading looking like?
Well, for now, market is still highly offered on almost all the securities except MTN and Total that are seeing some tractions. So we expect the demand for MTN and Total to still be on the rise for at least this week and the week to come, until some results start coming in for the fourth quarter or the full year results coming in next year, before we'll be able to see other stocks pick up as well.
Anything else you've got your eyes on this week?
Well, we're looking at still the money market. The government is targeting 1.98 billion this week. We already see excess liquidity on the market, so we expect that to be highly oversubscribed as well for this week.
Thank you so much, Patrick Edemagama there, Head of Trading at Republic Securities. I appreciate the insight. So back to the debt exchange program, because the Bank of Ghana has rolled out fresh set of relief measures to support specialized deposit-taking institutions that will sign up for the debt exchange program. This is similar to what has already been outlined for commercial banks that have also signed up for this initiative. Here's George Afe's report.
Based on this letter sent to the specialized deposit-taking institutions, which includes savings and loans companies and microfinance institutions, the central bank maintained that it will reduce the cash reserves from 6% to 5%. The central bank also disclosed that it will reduce the capital adequacy ratio from 10% to 8%. The regulator also directed these institutions to submit their weekly data to the Bank of Ghana when it comes to the liquidity ratios, to enable the Bank of Ghana to monitor their liquidity needs. On the up to 15 billion Ghana cedis stabilization fund that government is working to set up, the Bank of Ghana asked these institutions to submit their action plan in terms of how they want to access these funds in meeting their liquidity needs. What the Bank of Ghana has rolled out is similar to what it announced for commercial banks last week. Some key points to note here. Institutional investors in the commercial banks have up to December 19 to sign up to this debt exchange program. Now, based on the letters sent to the commercial banks and non-deposit-taking institutions, these regulatory measures that the Bank of Ghana has rolled out will take off from December 23, 2022. All these measures put out by the Bank of Ghana is to ensure that none of these financial institutions is impacted badly when this debt exchange program kicks off. But it will be interesting to see whether all these financial institutions will indeed sign up to this debt exchange program by December 19, 2022.
Financial analyst Christian Techijan is on Zoom with us to discuss this. What do you make of these raft of measures? Concrete enough?
Yeah, thank you very much. Good afternoon, Daryl, for having me on your program. Yes, absolutely. When you look at government total debt, that is the domestic debt of about 15.5 billion. The commercial banks alone hold a chunk of it, which is about 5.1 billion. That is expressed in USD. And this represents about 33%, and it happens to be the biggest sector in terms of percentages of the debt owed to. So it's absolutely important that the government pays a critical attention to that sector. And we shouldn't forget that somewhere 2016, 2017, the government spent over 16 billion Ghana cedis, we understand, in cleaning up the banking sector. And since then, there's been a lot of success that's chalked. So whatever it is to be done by the Bank of Ghana, by the central bank and other stakeholders to actually ensure that the sanity of that sector is maintained has to be done. Against this backdrop is the central bank moving to address the potential impact of some of these debt restructuring proposals to ensure that the banks stay very liquid.
The finance minister also announced the establishment of a financial stability fund to support banks improve liquidity. The idea sounds good, but there are already questions about where government is going to get the money for this. Is that also a legitimate concern?
Yes, of course, it's a legitimate concern because government is already struggling with liquidity by itself. But for me, the savings from the interest payments that were going to come from the bonds should be able to compensate for that arrangement that is being done. Yeah, 15 billion Ghana cedis in support. It is not just the 15 billion that is going to be used as the liquidity support. The measures that were contained in the letter addressed to the commercial banks, I think, should be something of a buffer, and that stabilization fund of 15 billion is what is only going to support. So the capital adequacy ratio, the other cash reserves that are going to be implemented, the new models that are going to be implemented, we ensure that the banks stay liquid as much as possible. So the stabilization fund of the 15 billion is only to support that arrangement.
Yeah, and whilst we talk about this, we just have to bear in mind that we only recently came out of a banking crisis. Some people have still not received payments for their locked-up funds, and there's fear this debt exchange program could further affect banks. What can banks do? How can they properly position themselves so they are not negatively impacted by this initiative?
Yes, when you look at the sectors in Ghana, I would say the rural areas, I'm sure, definitely are going to face a bit of panic withdrawal, and that is going to lead to some liquidity challenges because they do not really understand fully what the exchange program is. But in the elitist environments, like the bigger towns and the cities where people are really abreast with what is really going on, their understanding is clear. They know that so far as their monies remain with the commercial banks, government is not going to touch it. And so the possibility of withdrawing from the bonds and rather depositing into their savings account or the fixed deposit instruments that are offered by the banks, it's something that is that we look at as an opportunity for them. So all in all, if you look at what is going to be withdrawn, especially in the rural areas, and then what is going to be added on in the urban areas, the banks should be able to stay liquid in terms of the availability of cash with them to manage the crisis.
Well, last week we had the executive secretary of the Association of Savings and Loans Companies on, and he revealed that some firms were being hit by panic withdrawals already due to the uncertainty surrounding the debt exchange program. Also interesting, you point out what the situation could be in rural areas. And so this also has to do with messaging. And if we are doing it right, what sort of reassurance do bank customers need right now?
Yes, of course. The modalities are clear. Fixed deposits are not affected. Even treasury bills are not going to be affected. I mean, the treasury bills are government instruments. The fixed deposits are the instruments or the products that are actually held by the banks. It's important that as analysts, we try to put across the right kind of information. As media, I think it's also imperative on us to ensure that the right information is passed on. And especially with the rural folks who do not really have the opportunity in being on some of these platforms. I mean, the vernacular speaking stations can do a bit of good to us in trying to explain what the dynamics as far as this debt exchange program is. Once the understanding is given them, because I mean, from where we sit, we've had a lot of calls from a lot of people. Despite all the information that are being bundled around, people still do not really trust that indeed these things are going to happen. But once the calls come in, we do tell them that as far as we are concerned and the government has actually communicated, the fixed deposits, which is a product of the banks, is very safe. And we hope that they will actually listen and maintain their funds there.
Well, we'll continue to observe. Thank you so much, Christian Techijan, financial analyst, for your perspective. You're watching The Marketplace. Now, the Chartered Institute of Marketing Ghana has advised labor unions kicking against the debt exchange program to rescind their decision. According to President of the Institute, Dr. Daniel Kasati, the program is necessary to support government's quest to ensure a stable economy. Dr. Kasati was speaking at the 32nd CIMG President's Ball and induction of new members.
Many professional associations have publicly declared that on behalf of their members, they will outrightly reject government-proposed debt exchange program. They are understandably unhappy with the sheer depth of the haircut they and their members are being asked to accept. However, my advice, based on what I have heard experts say, is that we should all take a step, control our anger and emotions, and take a good hard look at the situation we are faced with. Simply put, government has warned that it is no longer in a position to meet its debt servicing obligations on both interest payments and principal amortization upon maturity. Indeed, the data, which is in the public domain and which I have obtained from a reliable source, my good friend Toma, confirms that those claims by government are unfortunately true. Without the debt exchange program, debt servicing alone would, in 2023, consume close to 70% of the nation's projected tax revenues.
Now, the United States government says it is stepping up aid by some $5.4 billion to support the World Food Program. The allocation is targeted at supporting African countries build resilience in the Greek sector following a surge in the cost of fertilizer due to the effect of the Russia-Ukraine war. In view of the effects of the escalating tension, African leaders are expected to forge new economic partnerships in Washington, D.C. this week at the U.S.-Africa Leaders Summit. Speaking ahead of the conference, U.S. Ambassador to Ghana, Virginia Palmer, said food security will be on the agenda for cooperation between Ghana and the United States.
Not the Russia-Ukraine war, it's Russia's invasion of Ukraine. If Ukraine stops fighting, Ukraine ends. If Russia stops fighting, the war ends. And indeed, as you point out, the war has exerted terrible cost on the globe, and particularly Africa, and particularly in food security. So the United States has stepped up with $5.4 billion in assistance to the World Food Program just this year. We're also working to help countries do better agricultural techniques. In Ghana, we're working to help farmers use organic fertilizer better, for example, because the cost of fertilizer has doubled or tripled in some places. I know the cost of fuel has gone up too, and inflation is being felt all over. So we really do appreciate Ghana's steadfast support in the UN Security Council. Its leadership has been really important in standing up to Russia and saying, no, we're not going to tolerate that kind of bald aggression, and reminding everybody, I think, to pay attention to the problems that this causes in Africa.
And if indeed we're to reassess what's happening now, some experts argue that it's exposing how Africa lacks resilience. What do you think is that major factor inhibiting African countries from building economic resilience?
Oh, that's a big question. And I mean, I think the answer is a complicated one. Democracy, we believe, is fundamental to transparency and accountability, which is fundamental to getting those things right. It is hard when you start from behind the finish line, when you're already stressed. Additional stresses like COVID and the inflation of fuel prices and food prices that are the result of the Russian invasion then make things worse. So I think building resilience, strengthening legal regimes, strengthening business environments so that things are done transparently and investments that are made are world class. There's not a race to the bottom and countries are not exploited by foreign investors, is very important to that resilience.
All right, now Synlab Ghana, a leading medical diagnostic center, has disclosed that it has invested about 30 million euros over a period of 6 years to support healthcare delivery in Ghana. According to the CEO, Patrick Isiama, Synlab is committed to providing quality and timely healthcare services to Ghanaians. He was speaking at the unveiling of Synlab's new ultra-modern office complex in Accra. Here's more in this report.
Synlab Ghana became the biggest medical laboratory service provider in the country after acquiring MedLab 6 years ago. Synlab Ghana forms part of Synlab Group's global network, which is present in 40 countries and 4 continents with over 1,000 specialists to rely on. Speaking at the unveiling of Synlab Ghana's ultra-modern office complex in Accra, CEO of Synlab Ghana, Patrick Esiama, disclosed that a total of 30 million euros has been invested to expand operations and ensure improved service delivery in the healthcare space.
Within the 6-year period, we have invested close to 30 million euros in Ghana, starting from the acquisition to equipment upgrade to expansion to hiring more staff, workers, to the upgrade and what you see today. In addition to that, we support the healthcare delivery space by ensuring and helping doctors to be able to accurately and in a quality way diagnose diseases. So there is improved healthcare delivery, and overall patients' quality of life is also improved.
The Director of External Health Cooperation at the Ministry of Health, Dr. Hafiz Adam, reiterated government's effort in strengthening monitoring and compliance to ensure high standards in healthcare delivery.
Currently, as ministry, we are reviewing the conditions of all our land, and we have started identifying and getting our partners to make sure that we renovate and replace all obsolete equipment that are in some of the government labs that are functioning now. And for those who are operating privately, the only thing we can do, as you say, is to regulate and make sure that they keep to the standards. If you are not keeping to the standard, then it means that you cannot operate, because we can't allow any services that will mar the results and eventually affect the diagnosis. Because
Speaking at the event, the CEO of Synlab Emerging Markets, Thomas De Goat, said Ghana was chosen as the first country to begin Synlab's operations in Africa due to their safe and stable socio-political landscape.
Short story about our presence in Ghana. Patrick already mentioned in 2016 we acquired a major stake, a majority in what we saw the best laboratory in the whole country. And of course we focused on one of the oldest, not the oldest, democracy in one of the safest countries on the African continent for our first footstep. So since 2016 we started to implement wherever necessary our understanding of quality and our plus in tests. Before we came, MedLab could offer roughly 300 different parameters. Today we can offer everything out of the list of 6,500. There is no laboratory on the planet which is offering more laboratory parameters than we do. The scale goes up to a number of 6,500. There is no test on Earth which we couldn't provide, and we provide everything in our own laboratories.
All right, you're watching The Marketplace. Next, your money tip on MoneyLab.
Hello there, and welcome to MoneyLab. In our previous episode, we looked at mutual funds and the importance of investing in mutual funds. Today, we shall learn about compound interest and how compound interest can help you grow your wealth and achieve your financial goals. Compound interest is an interest you earn on your interest. If you invest 100 Ghana cedis in an investment fund that yields 10% per annum, you will have 110 Ghana cedis in year 1. In year 2, you will earn interest on your initial 100 cedis plus the 10 Ghana cedis interest you earned in year 1. You will therefore have 121 Ghana cedis at the end of year 2. Albert Einstein once said compound interest is the 8th wonder of the world. The real route to financial independence is to set aside portions of your income into an investment fund so that it compounds over many years. Thank you for joining us on MoneyLab. See you next time.
That's our program this afternoon, but you can get up to date on the latest news stories on our website, myjoyonline.com/business. Head over there to read the day's latest stories. My name is Daryl. Thanks for watching. We'll be back same time tomorrow.